Good morning. Thanks for joining us today. We have a new to market story, Millennial Precious Metals, and CEO Jason Kozak's here to tell us all about this new Nevada exploration story that listed this morning on the TSXV under the ticker MPM. Before we get started, as always, this presentation will contain forward-looking statements. You can find more about those on the company's presentation on their website. And there will be a Q&A section at the end, so feel free to put your questions in the Q&A box and we'll get to those eventually. With that out of the way, hi Jason, nice to see you.
You as well, Deb. Thanks for having me on, and thank you everyone for your time today. I guess I'll give you a background on how the company really formed. Between my partners, Terry and Ruben, we really wanted to get a toehold into the United States. We had a vehicle that was already set up that focused on Latin America, which is Sabo, which Ruben runs. We have another vehicle in North America called Talisker, which Terry runs. And this was our idea to get really a toehold into the United States. And over the last year and a half, we've done about 352 desktop reviews, 32 site visits, and really selected these 7 assets that I'll be presenting to you on today. Just a cautionary forward-looking statement that I'm sure everyone has seen before. Myself, Deb gave a good background. I'm a structural geologist by trade. Andreas Dinahero has been with me since Trelawney. Ruben and Terry have over 30 years experience, both brilliant PhD geologists and part of the Anglo Gold Ashanti team. And then Mike Leskovic with the Northfield Group. What we're really trying to do here, everyone, is build a multi-million ounce, multi-asset company focused on near surface heap leachable ounces in Nevada. Why we're doing that is really to lower our cost per discoverable ounce and put their dollars to work as quickly as possible. Quickly, from a share structure point of view, there's 135 million shares out. Currently today, we're sitting around 63 cents. We have $23 million in the bank, a very strong institutional shareholder base from the likes of Merck, Eric Sprott, Vescor, Regal, Nugen. And one might ask how you have such a strong institutional base in a micro-cap story. And I think that really speaks to the track record of our team and our management team. I myself have played in every round of financing. I've put in over $450,000. I know that's not a lot of money for some people, but as a 33-year-old, I can assure you that's a significant chunk of my savings. Just from a corporate summary, what do we get? You get a team that's discovered 59 million ounces across 7 projects. And the key metric is 5 of those projects are in construction or in production today. We have 23 million, like I already mentioned. We have 1.2 million ounces of global oxide ounces with 700,000 ounces of potential. Blended grade is 0.45. And the key metric that we'll talk about later on is it's a 1.1 strip ratio. So extremely low strip ratio. And that's what really we were looking at because a lot of people have forgotten about that. We have 7 quality assets, 2 development stage, Mountain View and Wildcat, which have the resources on them currently. We have Red Canyon, which we're currently drilling. It's a wonderful exploration asset, Carlin-style system, just south of Cortez, right beside Tonkin Springs. And then Dune, Eden, Marr, and Ocelot, I won't touch on that much today because they're really grassroots and conceptual targets that are really part of our growth pipeline. First asset I'll start off with is Wildcat. Like I said, it sits at 776,000 ounces. These are pit constrained ounces. We actually use economic parameters with them. We use a $15 to $100 gold price for the pit shell, 45-degree pit wall. The recoveries on the oxides range from 80 to 87. We use 80 for the pit. And you're sitting at 0.4, but extremely low strip. What really got us excited about this, and this came from Adelaide, Nevada, And their mandate was, and I'll show you in the next slide, they just wanted to drill the oxides and leave the transition and the sulfides alone. Luckily, they drilled into the sulfides in a few holes. We're seeing some significant intercepts once we're cleaning all the data. Stuff like 80 feet of 8 grams and 35 feet of 17. What that looks like is the way these low sulfidation epithermals form is the fluid migrates up vertically, as you can see I'm drawing here, and then hits a more permeable host rock, which is a volcanic unit. Luckily, we have a few holes into the high-grade boiling zone that display this high-grade nature. Also, out to the northwest, there's a lot of potential in infilling because of a lack of drilling. So the first phase of the program and second phase is defining this high-grade core, infilling, converting ounces. It's an 8,000 meter program that will start in the third quarter of 21. That drill program will then feed the resource in the second quarter of 22, and we'll do an updated, and then we'll feed the PEA in the third quarter of 22. The program is $2 million US for 2021. I don't need to go into how amazing the infrastructure is in Nevada. You can drive right to the project. There's rail lines, there's power. I think that's a given when you're talking about Nevada. Second project or development project is Mountain View. Again, all the same parameters, 80% recovery, even though we saw results around 85 to 87, $1,500 pit shell, 45-degree pit wall. The grade here is substantially higher at 0.57, and the strip is a little bit higher. Very similar, we're sitting at 427,000 ounces currently. Very similar, you're seeing 70 feet of 6.8, 20 feet of 12.1. There's some other intercepts as we're cleaning the data where you're getting anywhere from 1.5 meters to 3 meters, 50 to 100 gram type of material. Similar thing you can see here, out to the northwest, a lack of drilling. So a lot of the drilling will be infilling in here, which will in turn lower the strip in here. Also, you can see the sulfides and the high grade in the block model have only been drilled a few times. So again, the program will be infilling to lower the strip, convert the ounces, and define the plumbing system. It's a 9,000 meter program. We'll start it in the second quarter. That program will feed the updated resource in the second quarter of 22, and then feed the PEA in the third quarter of 22. The program is $2 million US budget. It should be noted, we've done this multiple times in the past, so we've already engaged an engineering firm to start working with it. So a lot of our geology holes are also geomechanical holes and metallurgy holes. So we're not redoing the work, because I believe that one of the biggest killers of junior companies is time. And we need to be uber aggressive to de-risk these things and start the permitting process right away. The next one is Red Canyon. This is what we're currently drilling right now. It's a beautiful Carlin style system. Historical intercepts, 39 meters from surface, 4.8 gram oxide. The real system hasn't been properly recognized. So a lot of the work we're doing right now is drilling with oriented core, HQ core, so we can do the proper met work. We can understand the fault block kinematics and also understand the stratigraphy, so we can do a resource hopefully next year, because a lot of the previous drilling was done with RC. So you don't have the proper confidence to do the proper geological wireframes to put out a resource. That being said, you don't understand the fault block kinematics, which is very, very important for Carlin style systems, along with the stratigraphy. You can see exactly where we are. Cortez is up here. We're about 22 miles as the crow flies. You have Tonkin Springs, Gold Bar, and Afghan. So right in the heart of the district. There is no royalty on this project, which is extremely rare. We granted a 2% with a 1% buyback for 1.5 million. Like I mentioned, the program is 2,500 meters, starts in the second quarter. This has the complete permit set up already, and it's a $1.3 million budget. For any geologists out there, really, these are the main criteria for Carlin's type of systems. And Red Canyon really checks all those boxes. Conceptually, right now, we run our internal block models and it sits around 300 to 500. But these types of systems can go up to 22 million ounces. I would never say that it could be that it's there now, but all the main attributes are in place. Quickly from a comps perspective, what I mentioned earlier for project economics is having a low strip, and this is one of the lowest strips in Nevada. The grade, we think we can get it quite a little bit better from 0.45 up to 0.5. So really having strong economics that'll feed the PEA and be in line and a leader in our peer group. Right now, where you're sitting a little bit different, but when we came out of the RTO on an EV ounce basis, you're sitting at $31 an ounce. Industry average in Nevada, you're looking at around $60 to $70 on an EV ounce basis. So right out of the gate, you get a significant re-rating opportunity. And then everything, all the exploration, upside, and all the ounces we're going to be adding onto the board with this drill program is basically your blue sky and your free carry. Right now, we sit at 1.2 million ounces globally. These drill programs that we're executing this year should bump that up to just over 2, maybe 2.5 million ounces in the next year and a half, which will make us one of the leaders in Nevada, and especially for oxide, near surface, low strip ounces. Really, in a nutshell, you have a strong resource base right out of the gate. You have 7 quality projects in Nevada. We have an aggressive drill program campaign. There are low cost ounces near surface. We'll be aggressive because we're very cognizant of the time value of money, a strong cash balance, a team that's put up 59 million ounces across 7 projects. We're the in-house technical team for Osisko and the Talisker Group, and a really strong shareholder base that will support it moving forward. Briefly, I'm going to touch on the grassroots projects. Ocelot and Marr, they're conceptual by nature. They're low sulfidation epithermals. They're really part of our growth pipeline so we can have a good organic growth strategy. No money's been being really spent there. It's just data compilation and possibly a little bit of staking. In Nevada, a lot of these things that come to surface have been discovered. And all 4 of these, Eden, Dune, Marr, and Ocelot, that are these grassroots conceptual things, what they are, they're all low sulfidation epithermals that are buried by post mineral volcanics. So we actually have to use our geological tool chest to start being systematic and scientific to peg off these assets that are buried, because like I said, everything that comes to surface has been discovered in Nevada. A great example of something like this is the Sleeper deposit that sits just north of Dune. With that being said, I'll definitely open it up for questions if anyone has anything.
I have a couple questions. Can you talk about your most recent financing?
Totally. So last financing was done at 50 cents. It was oversubscribed. We went up on 15 million. We took down 24, and we had about $35 million of demand. It was all major institutions, hence why we have 53% institutional. The financing before that, just so everyone is clear, is it was a 30-cent financing, friends and family round, but the kind of gentleman's handshake, so to speak, was if you played 30 cents, you had to go 3 to 4 times on 50 cents. So a lot of people's average cost base is around 46, 47 cents. And all that 30 cents and 50 cent stock is free trade.
Okay, great. And it looks like the stock's trading really well today. So congrats on a successful listing.
Thank you.
Could you touch a little bit more on the management team? I don't believe that you really went over it in much detail.
Sure. Ruben is a brilliant PhD magmatic epithermal geologist. He spent a lot of time with BHP and AngloGold Ashanti. He was the chief geologist and founder of Talisker, which is the technical arm for the Osisko group. Terry, same thing. He spent a lot of his time with AngloGold Ashanti. They were both led the discovery for Las Colossus and Gramalote. He was one of the founders of Talisker Exploration Services, which was the head technical division, as I already mentioned, for the Osisko group of companies. Mike Leskovic is with Nighthawk and Northfield Capital, and sold the Bruce Channel deposit to Goldcorp for $1.5 million. Andreas Inahero has been with me since Trelawney, which we sold to IAMGOLD in 2012 for $680 million. Cote Lake is in production today. He's also with the United Nations State Bank and was with Trelawney and Osisko Gold Royalties. And that's pretty much it. We'll probably bring on one more board member and one more advisor in the coming weeks.
Okay, great. What's your anticipated timeline for the updated resource and subsequent PEA? And will those incorporate both Wildcat and Mountain View?
So yeah, Wildcat and Mountain View, the resource will be done in the second quarter of 22. And then the PEAs for both of them will be in the third quarter of 22. So pretty aggressive strategy. And the reason why we can do that is because we've already brought in the engineering team. And what we'll do is a lot of the geological holes will test the pit walls so we can know what the rock mechanics are. We're drilling HQ and PQ, so we can also do all the column and leach and bottle roll tests to get a better grasp on what the true metallurgy and the leach kinetics are, as well looking at the sulfides. Right now, the sulfides are leaching around 50 to 57%. And like I mentioned, the sulfides around 80 to 87. We just use 80 in the resource because that's the average recovery for oxides in Nevada. But using a lot of the exploration holes to feed the PEA, and that's why we can get it done so quickly.
And can you elaborate a little bit on the metallurgy and specifically the oxides versus sulfides? I can't talk. Oxides versus sulfides. So is your intention, is the idea to open pit heap leach the sulfides, or the oxides, and then mine deeper underground for the sulfides? Sorry, that was convoluted. What's your plan with
It's still early stage. We haven't even put a drill hole into it. But what our plan is to open pit heap leach the oxides, which we should have in the mid 80s recovery. What we did, and what Darren and the team that I used to be a part of at Mineral Alamos at Santana, they built that project for $15 million US. It spits out about 45,000, growing to 65,000 ounces. And what we'll do is we'll just truck loaded carbon. So we won't pour Adore bricks. We just truck loaded carbon and toll mill it to lower the capex. With respects to the sulfides, it really matters on the porosity and the permeability of the host rock. So we know how much cyanide consumption and what leach timing is. But ideally, you would heap leach the sulfides as well if you can get 50 to 57% recovery on it. I think it's for smaller deposits, it's a lot better for the project economics instead of pulling a trigger on a processing plant.
And so your intention is to take these projects all the way through to production, or do you plan to divest them at some point? What's the overall strategy for the company?
Deb, we plan to put these into production ourselves. I think they're low capex projects, like I mentioned, and they're completely feasible financially and technically for our team to do it. That being said, when we sold Cote Lake, we sold it for $240 an ounce. If someone wants to give me $150 an ounce, you can have it.
All right. And how did you manage to secure these projects?
Luckily, a friend of mine and a colleague, I guess you could say, Jamie Flagg at Waterton, was divesting a lot of their portfolio and really always wanted to work with the Talisker Group because of our successful track record. So we had an open door and looked at pretty much everything in their portfolio, and we're able to make a fair deal. If we want to go to the actual transaction, so what it was a $5 million initial cash payment, $2.5 million payment on a milestone, which is the resource, 2.5 on the PEA. That got us to 6 properties, which is Wildcat and Mountain View, Marr, Ocelot, Eden, and Dune. The exploration grassroots ones was there was no royalty on them, so we granted a 2% NSR with a right to buy back 1% for $1.5 million, and then bumped up the Wildcat and Mountain View by 0.5%, so it's 2 and 2.5%. They also got 19.9 pro forma at the RTO.
Thank you. I think JB's on the call too. So hi, JB. Okay, so talking about Nevada, you touched on briefly as it relates to infrastructure and being a great place to explore and produce gold. Can you maybe go over some of the attributes of being in Nevada for some of our investors?
Totally. I think one of the key things is how well endowed the crust is in Nevada. It's the largest gold producer in North America, and I think it's second or third in the world. So, the easiest place to find a new gold deposit is looking in the shadows in the old head frame, is the common saying. I think there's plenty more to be discovered there. Also, from a permitting perspective and a government perspective, it ranks one of the best in the world. So allowing us to advance projects and de-risk projects very quickly in a timely manner. Places around the world are getting a lot harder to work with in permitting, and I think that's one of the biggest keys in Nevada.
Talking about permitting, are you fully permitted for your 2021 programs?
We have the permit for Red Canyon, we have the permit for Wildcat, and Mountain View should be coming in the next couple of weeks. So it's about a 3-week permitting process with the BLM. And then what that gives you is 5 acres of disturbance, which is plenty enough for us to execute our drill programs. And then to do, a full fees study, you need the plan of operations permit, which takes 12 to 15 months. And we're in the process of doing the plan of operations permit.
Okay, and can you remind us of what your total estimated budget for 2021 and 2022 in Canadian dollars and how many meters that is?
So it's 22,000 meters. It's 5.3 million for 2021. And based off the success in 2021, will dictate the budget in 2022.
Okay. And I've seen a lot of companies recently coming out with Nevada assets, and there seems to be a lot more activity in the area, or at least perceived activity from my perspective. How is it in terms of securing rigs, getting labor, lab turnaround times, et cetera?
That's a great question. And we were very aggressive right out of the gate and secured 4 rigs, because the biggest problem right now is there's no drillers in Nevada. So we have plenty of rigs that we've secured for a 2-year contract so that we don't run into that problem. Labs are very backed up. So we paid a little bit of a premium so that we could have 4-week turnaround time, because I think delaying assay results really impacts the momentum of your share price. So we've done that. Again, I think people is the biggest problem in our industry. And one of the things we want to do with Millennial is really grow the next group of exploration and development professionals. And we were able to secure geologists that really believed in the company's strategy, from Barrick and from Hecla. That we're sick and tired of the bureaucracy there. So, having a good core geological team, engineering team, and being aggressive with acquiring rigs, because we know that there's going to be, these problems are going to persist in the years to come.
Are you using a local lab, or are you sending it back to Canada?
We use a American assay in Reno, and then our umpire lab is ALS.
I would assume that the labs in the US are a little bit better in terms of capacity than in Canada right now.
But a lot of the assays, they get prepped here and then they get sent up to Canada. So they can prep them here, but the backup is a lot of the time is in Canada, actually.
Interesting.
Mm-hmm.
I have one more question about Nevada, actually. With all these juniors that are listing, and I think that there's 3 or 4 that I know that I've listed in the last quarter or about to list. How do you differentiate yourself?
So I think the biggest thing is we have quality economic oxide ounces. These are not refractory ounces, and really seeing the resource doubling in the next year. I think having an aggressive strategy and really having a drill bit story and putting out quality results over the next year and de-risking the projects faster than anyone else can.
Okay. And how many meters have been drilled so far at Red Canyon? And when did you start, a timeline for your first assay results?
We started in April. We're 6 holes in. We should have results in the next couple of weeks, I would say. And there's about 4 other holes being shipped today to the lab. And roughly there's been about, I believe, 800 meters or 1,000 meters drilled at Red Canyon before, but all RC holes.
Okay. And having just gone public, I'm sure that you have a bunch of news flow lined up to keep investors excited. Can you maybe list some of the catalysts that you have coming over the next few months?
So we'll put out a press release tomorrow that we've actually initiated the program at Red Canyon and give everyone a breakdown. We'll put out consistent news flow on the drilling every 3 weeks. We'll try our best every 3 weeks. We might have another project in the works. And really that's it. And then in the updated resource next year. So consistent news flow from every 3 weeks from now until the new year.
Right. Well, it sounds like exciting times. I don't see any other audience questions. Is there anything we didn't touch on that you wanted to talk about today, Jason?
No, I think you did a great job in asking me all the questions.
Hey, I made up some of them. I didn't just ask them, Jason.
Sure.
I'm not just a webinar Vanna White. Well, now that you've taken a jab at me, I'm going to make you do a 1-minute pitch of Millennial. Summarize it. Yeah, summarize it. Tell us why investors should be buying stock today.
Well, I think the key thing is that you're in the best mining jurisdiction in the world. You have a team that's put up 59 million ounces across 7 projects, and 5 of which are in production or construction today. Right now, at the current valuation, you're getting them on a $30 on an EV ounce basis. You get an instant re-rating opportunity to trade in line with their peer group to 60 to 70. And really over the next 6 months a year, we'll be doubling our resource base, and you'll have consistent news flow, along with $23 million in the bank, which most junior companies do not have, and a very strong institutional shareholder base that'll be supportive the whole way. Was that a minute or is that too short?
I'll let you get away with that one. Wasn't too bad. Well, there you have it. I think it's a really interesting story. Good luck. Congrats on the listing. Looking forward to some of the news flow. And nice to see you running your own company, Jason. Congrats.
Thank you very much.
And
thank you everyone for joining.
I was thinking about this halfway through the webinar. I think you and I met in Nevada for the first time in Vegas, in between Beaver Creek and Denver Gold a few years ago.
that we did, actually.
Hopefully we'll get down to Las Vegas in a site visit at some point this fall. Do you have intentions to plan a site visit for investors?
Yeah, if people can travel, I would love to do a site visit. Hopefully, I don't know what's happening with Beaver Creek, but it's a real easy site tour from Reno, so it's really accessible, and we can even do a pit stop in Vegas if you want to.
Awesome. Well, I look forward to it. I look forward to seeing you in person one day. And thanks for presenting today. And thanks to everyone for participating. And yeah, good luck with the projects.
Thanks. Take care, everyone.